It's time to do business again. It's 55 minutes that we have to go around the world of business. And here on Business Incorporated for today, here's what we have prepared for you. South Africa has gotten an approval for its loan from AFDB. Is there hope for a new trade relationship between South Africa and the US? Well, there's a proposal to that effect. Ghana is looking to maximize its economy. 24-hour economy has some investment coming up. Good afternoon, everyone. I'm Ini John McCoy. We start business as usual from the global space. Oil prices rose. We see in a volatile session following the United States' weekend move to join Israel in that attack. And so we look at the numbers at this time. It's $67.39, almost a percent higher for Brent, while WTI $65.79 a barrel. Of course, the geopolitics are the major drivers of the markets at this time of major commodities, oil also included. Still staying in the oil space now, Dangote Petroleum Refinery has reviewed its ex-depot price for premium motor spirit, that's petrol, to 840 naira for a litre, marking a strategic move to undercut private depot operators who have dominated the markets in recent days. The review comes after Dangote withheld its pro forma invoice price earlier in the day, raising speculation across the downstream sector. Industry watchers had predicted a drop following consistent reduction from private depots and falling global oil prices. So Lagos depot now sell at about 860 naira as the price war deepens on Monday. Several Lagos depot, including Aito, Menje, and Mao, offered PMS at 860 naira for a litre, continuing a downward pricing trend that started late last week. Well, we know that this reduction in ex-depot price by Dangote is also in addition to the August 15 plan to have distribution to major clients in different parts of the country in order to also bring about uniform pricing of petroleum products, petrol and diesel in focus now. So earlier today, during Business Morning, had a conversation with the Chief Executive Officer of Financial Derivatives Company, Mr. Bismarck Rewani, on how long the people will have to wait to see the impact of this in everyday transaction.
This thing kicks off on the 15th, but even today, you can see that people are now beginning to build in the expectation. The expectations are that prices will no longer increase as sharply as they used to increase, which is the definition of inflation. But also, the fact that when you can see the investment in the infrastructure, the network, the trucks, the gas stations, the credit to retailers, the independent and major marketers falling in line to ensure that they can pass on these prices to others because of competition. I think that by the end of August, that is end of next month, and September, we'll begin to see the reduction in transport fares and in the reduction in the price of moving products, farm products, food products, from the farms to the cities, from the cities to the manufacturers, and so that the manufacturers will pass on some of these prices to the retailers. So it's not just the price of petrol, but the price of the commodities that are moved with petrol and diesel. And if those prices come down, then you would see that the people, there'll be some relief. There'll be some relief, and people will be much happier than they are today. But it takes time, but not too long. The people cannot wait indefinitely. And that is why the initiative and the amount of investment, you're talking about 1.7, 1.8 trillion naira now, in addition to the $23 billion of refinery and the fertilizer and the petrochemical. So when you take the entire value chain, you see that this is the biggest investment in this part of in West and Central Africa for a long time.
And now away from oil and gas, now metals. Gold prices rose over 1% on Tuesday as a weaker dollar and uncertainty over U.S. tariffs, along with concerns about the country's fiscal outlook, drove investors towards safe haven assets. Spot gold was up 1.1% at $3,339.20 per ounce, while U.S. gold futures rose 1.6% to $3,359.30. The U.S. dollar, we see, weakened to its lowest level since early 2022, making gold less expensive for overseas buyers. President Donald Trump expressed frustration over U.S.-Japan trade negotiations on Monday as Treasury Secretary Scott Bessent warned that countries could be notified of sharply higher tariffs as the July 9 deadline approaches, despite good faith negotiations. Markets are also focused on a vote over Trump's sweeping tax cut and spending bill, adding to the already uncertain market environment. Meanwhile, Trump continues to pressure the Federal Reserve to cut interest rates, sending Fed Chair Jerome Powell a list of global interest rates on the data front. Markets are waiting for job opening readings, which is due later on today, and the ADP employment reports that's due tomorrow, Wednesday, and non-farm payrolls that's due on Thursday. And gold is seen as a safe haven during times of economic uncertainty and tends to perform well in low interest rate environments. That's talking about that precious metal there. Then we come back home to Nigeria, where the Lagos Chamber of Commerce and Industry is collaborating with the Bank of Industry, and they are coming together to build innovation hubs across the country. And they say it's targeting small businesses and youth to empower them, give them opportunity to also explore their potentials. Executives and members of the Lagos Chamber of Commerce and Industry and the Bank of Industry are meeting to further conversations and implementation of their jointly owned Innovation Hub, which was conceived to empower youth, small businesses and startups with tools, networks, and environments they need to grow, innovate, and scale up.
We wanted a hub where we'll produce IT specialists and IT industry who can, out of this hub, service clients around the world in specialist IT-enabled services. So whether it's in aviation, in engineering, in healthcare, our vision is to produce people from this hub who can give the best kind of outsourcing services to the largest corporations in the world out of Nigeria. So this is the vision of this hub. At the high end of the hub, at the lower end of the hub, we want to produce a large number of IT-enabled people working with the government to produce people who can be self-employed or work out of this place and serve their clients.
The Bank of Industry notes that this collaboration with LCCI is in line with its plan to partner agencies and institutions to spread innovation hubs around the country.
All shareholders, investors, policymakers, and ecosystem builders to actively support its success. Let us work together to scale its impact, mentor the next generation of innovators, and ensure that the benefit resonates far beyond Lagos, reaching communities and creators across Nigeria. We commend the Lagos Chambers of Commerce and Industry for its foresight, insights, and partnership in bringing this vision to life. At the Bank of Industry, we remain steadfast in our commitment to building a future anchored on inclusion, innovation, and enterprise. Together, let us continue to unlock the full potential of every Nigerian idea and transform bold aspirations into lasting impact.
Thank you so much. Thank you.
The facility, similar to others in other states, features state-of-the-art amenities including co-working spaces, high-speed broadband, tech labs, creative design studios, and incubation suites. Renewable energy systems have also been deployed to power it and fully equipped for 24/7 operations. Afreximbank just concluded its annual meetings in Abuja, and now they take the conversation further in Lagos as they organize AFCFTA accelerating meeting that was held in Lagos with stakeholders concerned. Infrastructure is a challenge in driving it, and that was part of the conversation.
Nigeria IATF 2025 Business Roadshow has been described as a gateway to intra-African trade. The theme, harnessing regional and continental value chain, is Afrexim's way of sustaining the conversation of exploring the about 1.4 billion market available on the continent.
Arguably, Africa's intra-regional trade accounts for less than 15% of our total trade volume. This is far below what is obtainable in other continents like Europe and Asia, and speaks to the fact that African countries do not trade much amongst themselves. And so we see countries exporting to other clients products and commodities needed by other African countries, who then have to import the same product back to the continent.
Is no longer a developmental aspiration. It is an imperative for survival, for recovery, and long-term prosperity. We need an Africa-first mentality, not as a slogan, but as a deliberate strategic shift to prioritize African production, African capital, and African innovation.
A major to cross if Africa would increase intra-African trade is infrastructure.
Infrastructure is also a major issue that we are tackling. We know that right now in the continent, most of the goods are moving by the roads, but they are not supposed to be on the roads. And most of those roads are in poor condition. They are basically congested. And in some areas, you also have those most powerful people who are manning those roads who will not even allow the goods to move, even if the roads are smooth. So these are some of the barriers that we see in intra-African trade. And we also have the tools that we are using to facilitate trade through policy advocacy to ensure that there's free movement of goods. But most importantly, we are also working on intra-African maritime routes.
Issues raised by the speakers are further dissected by a panel.
What is your country risk rating? If you are an enterprise or a company that is located within that country, there's also the other thing that the rating agencies use, which they call it the country ceiling. What that means is that it doesn't matter how well you do as an industry, so long as you're located in that country, you're subject to that ceiling, which is the rating that has been provided for that country.
Exciting times and prospects for African trade. However, much is yet to be done.
Exciting times indeed for African trade and, in fact, the whole of African economy. But back here in Nigeria, NECA, that's the Employers Consultative Association, they are still celebrating the victory over that FRC, that's Financial Reporting Council dues, which has been capped by the federal government and suspended for a bit. I had a conversation with the DG of NECA early on Business Morning, and this is what he has to say.
We have resolved the FRCN issue, by God's grace. Now, there are other silent issues that we are also engaging, that I've also, we are receiving very positive response from government. The investment going on in the trade and investment space, reforms going on in the Ministry of Interior with the immigration and the new immigration processes. And our engagement has been constructive, and it gladdens our heart that at least people are listening. The ministries are listening, the agencies are listening, and we are co-creating structures through our own positive recommendations. We are co-creating structures that will not only support local businesses, but also make the environment a bit more hospitable for business. And the more it's hospitable for business, the easier for employees to also feel the impact of the business. The more the international community will also feel comfortable to come invest in Nigeria. So it's a chain reaction. You resolve one, then your potential to resolve another is increased. And the more you resolve, especially the implementation of these reforms, the more you reform and the more you implement seamlessly, the more the confidence of the international community in your environment. So for us, I think we're in a positive trajectory, and we'll continue to play the role of institutions that will continue to share positive alternative recommendation to government. I will believe government will continue to listen.
Yes, Africa is on top of all the conversations at this time, or almost all the conversations at this time, but Africa also has to be ready, to tap into the potentials that are available at this time. Let's talk about Fintex because they are leading the way at this time. I'm talking about trade, payments, cross-border especially. And so we have right here in the studio to have this conversation with us, the co-founder of MapleRad, Obinna Chukwujioke. He's deeply into fintechs and making regulation and usage of fintech easy and smoothless or seamless at this time. So, Obinna, fintech, everybody's talking about fintechs and everything. But what would you say from your interaction are the most used aspects of fintech in Nigeria at this time?
Okay, fintech, it's a very broad, term to use. So from there's fintech in basically everything we do today. So from paying for your health insurance to paying for goods and services to importing or buying stuff online. So those infrastructures are powered by fintech. So the most used I can say today are those fintech that has to do with cross-border, because more and more people are trying to trade with neighboring countries, foreign countries like the US. Africans are trying to go global. So we want to actually be part of the global market. So the cross-border payment is what we see as what a lot of Nigerians are trying to engage in now.
So, and I'm glad you talked about Africa trading, with itself, countries on the continent. So there's also the PAPs now, and that's being pushed. But even that still has something to do with fintech, right? But has it become, if you were to rate the use of it, the dependence and trust in it over time, where would you place Nigeria?
So Nigeria has evolved in terms of payments, and we in Africa we are one of the largest in terms of we are exactly for population, but in terms of payments we are the largest so far. We do a lot of volume. So I would say Nigeria is at the forefront of this whole payment infrastructure when it comes to PAPs and intra-African trade, because looking at the numbers from my company, we see a lot of transactions from Nigeria to Francophone Africa, from Nigeria to Kenya, from Nigeria to Ghana, and vice versa. And most of these payments are originating from Nigeria, right? So it means we are paying for services, we are paying for goods there. We are trying to connect with those in other neighboring African countries.
Where is the most common route? I want to know, because I saw a data and we're told that, trade between Africa and outside the continent is still high, but it's increasing. That's intra-African trade is increasing. So when you talk about, originate the destination and where it's originating from, what areas?
So, some years back, if you wanted to move money from Nigeria to, let's say, Ghana, you have to convert to USD, and from USD or GBP, you are then back to Ghanaian cedis. But today, with platforms like MapleRad, you don't have to convert. You don't need that. You take out that middle currency, and you just go straight from your Nigerian naira to your Ghanaian cedis, or from Nigerian naira to maybe your ZAF, your African currency. So you don't have to start going through the USD route, which will also cause you to lose some money along the line. So we see more of the transactions going from naira to the Francophone Africa, because there are a lot of markets there, and people are trying to trade with people in those regions as well.
What do they trade? I'm just curious.
So they do so many things. So some of them pay for services online. Some of them buy, most of these imported cash crops and all this stuff. So a lot of Nigerians are also paying their staff that they employ, because of, we have remote work as well. So they pay for those, their salaries, payrolls, and other goods as well.
Interesting. So, and in all of this, regulation is obviously needed.
Sure.
You're preaching the message of simplifying regulation. How would you rate Nigeria's government when it comes to fintech regulation? Are we safe?
Yeah, we are safe, but of course we can get better. And in terms of regulation, I mean, Nigeria is doing a great job because you see the CBN always putting out and updating, their policies, regulation. Even sometimes you hear, oh, this license is on hold, CBN is no longer issuing it. So they constantly try to review these licenses and see what is actually obtainable in the market today and know how best to structure the licenses and the requirements they also need from these companies that are seeking these licenses. So I feel Nigeria is, doing great in terms of regulation, but what I would like to see is more partnership with, fintechs and, startups where government engages most of these startup founders and, ask, because we have the raw data, we speak to customers, so we know what they want, we know how we want to serve them. So if we can get that, more like close partnership or more like forum, where we can speak to the government and tell them, okay, this is what we want to achieve, this is how we want to achieve it, then they can structure their policies and regulation around that too. Because everything we are building today is for the customer, right? So it's not just about making
But you have
money.
an association, the fintechs.
Yeah,
maybe
we do.
They are doing the talks.
Of course, they are doing it. Of course, that's why I said we want more of that, yeah, so that it's going to make, simplify regulation. And you can't just, say, oh, there's maybe you're not sure of something that is going to happen. We want to have that update and make sure that we are really, giving this feedback to the government, and so that it can help them to, simplify, these policies and regulations.
So what would be an ideal policy now that you think can drive, drive maybe acceleration of fintech usage and startups and give them more encouragement?
Okay, one thing I want to see is the licensing. So for instance, it takes a while to get the license from...
Like how long?
Yeah, it depends. It can take from 3 to 6 months, sometimes a year, sometimes. There's one of the licenses we have that is actually pending for a very long time now. So
maybe you have not met up with the requirements.
We have actually, we have submitted everything, but yeah, it's part of it because in some other jurisdictions too, you also face the same challenge. So the speed at which the license is, issued will also help because customers trust, companies or businesses who are licensed by, government. So if this can come out fast, then fintechs will be encouraged, startups will be encouraged to, go for this license and be able to serve the people in Nigeria as well.
I'm kind of glad you didn't mention funding. Is that still a challenge? We seem to get, even though I think Kenya has overtaken Nigeria on the continent when it comes to attracting funding.
Yeah, funding is still necessary for business. For you to start a business, you need funding, but funding is not all there is to it, right? You need to also build a product that people want, people use, then you can grow. I mean, there are so many businesses, successful businesses today that started off without any funding, more like bootstrap and got to where they are. Some of them bootstrap onto a particular level before they started thinking about funding. But funding, of course, is something that every business needs to grow.
Okay, well, at least we're on the right track from your perspective.
Yeah, I mean, we're on the right track, of course.
All right, thank you so much. Obinna Chukwujioke, co-founder of Mapora, for your time.
Thank you.
Let's take a break. When we come back, we'll head to the markets for intraday numbers with Anita Edith. Please stay with us. Welcome back. Still Business Incorporated here on Channels Television, and head to the markets now with Anita Edith. Anita?
Good afternoon, Nini. And happy new month, happy new quarter, happy second half of the year.
I wish you all the same.
Exactly. You might see that smile on my face. That's because
I didn't see any smile on your face.
Let me put a smile.
Okay, this is now I see a smile.
And that's because, well, the stock market, it ended the first half of 2025 still with positive sentiment, despite that profit taking that we saw both on Friday and yesterday.
Congratulations to investors.
Exactly. I'm sure you're one of them. Right. So let's take a look at the markets at intraday. What you saw yesterday, the close of Monday's trading session, it was in the red, but take a look at the board there. It's still in the red. But so far for the month to date, which is as at yesterday, because the market is still, this is the first trading day of July. Month to date was 7.4%, still in the green, and that's so far the best month in the first 6 months of 2025. And as you can see there, so just yesterday the market lost about 10.88 billion naira. But yet today the market is still strongly in the positive terrain, 16.57%. This is after we saw the market losing, recording about 31 gainers and 30 losers, but still holding on to almost just a little drop from the 120,000 index level, which the market opened the year at about 100, a little over 100, 102,926.40. But has been able to come up to here, which is quite impressive if you take a look at the numbers, if you're gauging by the numbers. And we saw that investors have gained so far about more than 13 trillion naira just within the last 6 months, and under the new administration, or the current administration, over 40 trillion naira. So if you want to know where to put your money, where your mouth is, the stock market is one of your best options. It may not be the best for some people, but I would recommend that this is where most of your money will be made, just with a sound mind and peace of mind, can be rest assured. So for the Johannesburg Stock Exchange, 0.59% in the green, 96,000, is trying to climb into that 100,000 index level, which Nigeria stock markets has already dusted that number. So let's take a look at the other markets within the African continent. EGX 30 down 0.53%. And the Nairobi Stock Exchange. Now, let's focus on this Nairobi Stock Exchange. That's for Kenya's stock market. We see that Nigeria's stock market is not the only gainer there. Kenya's stock market investors there, their wealth has rebounded by about 1 trillion Kenyan shilling, fueled by the gains in the first half of 2025. And so this is for Monday's last trading day of June. We saw the market in the green, 0.64%. We have it here that the surge, which extended a rally that began in 2023, was when the market capitalization had bottomed to about 1.35 trillion Kenyan shillings before gaining about 1.067 trillion in 18 months. So far, Kenya's stock market is also one of the best performers when you're gauging the first 6 months of 2025. And then this is the countdown to we've already started the second half of the year, beginning from today to the 31st of December. So we'll be looking at which of the stock markets are the best performers so far around the world. Nigeria stock market, Kenya stock market, and some other African markets have actually been on steroids. So far, African markets, the bosses there are not doing badly at all. So now, this is the start of July. So let's take a look at what to expect within the month of July. We're starting first. Financial markets, well, the second quarter is over already, but we'll be taking a look at the third quarter, which begins today, July to the month of September, which is not too far away if you look at the months. So the financial markets will be eyeing the Q3 2025 bond issuance calendar from the Debt Management Office. So all eyes out on what the government's borrowing plans would be for the treasury bills market, for the bonds market, as well as the other market, the Sukuk market. Now, at the second time, the Central Bank's Monetary Policy Committee, the third meeting for 2025, that's later this month, will be coming about the third week of this month, July the 21st to July the 22nd. And still with the Central Bank, the Purchasing Managers Index, the Business Expectation Survey and the Consumer Expectation Survey, as well as the June report, will be out later this month. We're expecting that PMI should be out between today and tomorrow, or within this week. Then, of course, the others will be out sometime next week. At the same time, the market's also expecting the June inflation report due out for July the 15th and the OPEC monthly oil report, because Nigeria is an oil-producing country. So we'll be taking a look at how the markets, the oil markets, performed for the month of June. Nigeria, of course, will be in the eye of this report. So that source is from our business research unit. Now let's talk much more about Nigeria's stock market, which we just left not so long ago. We're going to review the first half, the second quarter, as well as the month of June which has been kind of quite impressive. But I think we'll get more highlights with Abiodun Adelotun, equities trader with First Securities Brokers. Thank you for joining us, Abiodun.
It's nice to be here again, Victor.
Yeah.
And happy new month.
Okay, so now equities, you're an equity trader. I'm sure you're one of those who have been smiling to the bank. Yes, you're with one of the listed entities on the NGX. Now, can you give us just expatiate more on the performance of the equities market in the first half and the other factors?
Okay, thank you, Victor. The equities market has actually done very, very well again. The market has been more on a very, very good ride for like 3 years running now. It's been good for equities investors. You barely lose money, especially if you have a very, very, balanced size portfolio. Inflation has somewhat influenced the proceedings. Companies are bigger, revenues are bigger, profitability is bigger, it's the market is expanding in nominal terms. Of course, the jury is still out there, when you talk about how inflation has battered a local currency. It's been a very, very good year, in equities again. The banks, of course, are the forefront, leading this way. You have the likes of GTCO, Zenith, and just to mention a few, you understand that have done pretty much well. And based on the releases we've seen in Q1 that was released sometimes in the month of April, and we believe that they'll continue to do well, even though there might have been a little bit of for the CBN circular, but this has, the banks have come out to explain, and there's clarity, in that space. In terms of also, we've seen very, very good upside. It's good to see the biggest telecoms company in the land bouncing back from last year, shocking fall due to deval. And it's all good being in the equities. There is no way you want to put your money right now other than equities.
Okay, yeah, you mentioned something about the telecoms. So we have two telecom stocks listed on the NGX, and they've also benefited from the recent telecom tariff hike, which was long awaited by them. Now, that was in the first half of the year. What should we expect in the second half of the year, this month, as well as within the quarter?
Okay, yeah, you expect them to continue to reap the benefits. There's a lot of expansion also going on, in the digital space, for the data space for the telcos, right? You expect them to continue to grow. You recall, for example, specifically MTN. MTN was more like in a hole last year, given the monumental losses. And of course, if you still check the balance sheets, even as at Q1, it still looks a little bit negative on the shareholder funds part, but you expect that they're going to get full recovery. And pretty much along the line, perhaps you expect them to come, to raise some form of capital. Is there value to be derived in the company? Absolutely yes, because the world is, data is life right now, and data is like water. And for those that are churning it out, you expect them to continue to thrive.
Okay, but that takes me to my final question with you. What sectors should investors be looking out for within the second half of the year and other measurements? And what will be driving these sectors? I've seen Presco hitting 1,000 naira per share. So what will be the driving force for some of the stocks in the later part of this year?
The key stocks to look out for remains the banks. The banks are going to make so much money this year again, save for maybe some provisioning or something like that, which we don't expect, to be a lot. The banks obviously comes top. You'd have some view on the consumer goods. You'd want to look at some of these international international companies. You understand? And more importantly as well, you want to look at what's happening to the oil companies, especially the offshore listed company, Alakat, Seplat, Aradel, and all. You see what's happening to oil prices recently. Oil rise remains on that. And mind you, these assets are, dollarized. So any form of weakness in Naira, speaks more boom for them in terms of local currency. So I think, and we've seen a little bit of speculative buying, among any stock traders also, you understand, you might begin to see a little bit done more, in that space. But whatever anybody does is very, very important to stick to sound fundamentally value stocks, because, sometimes when the market comes into a corrective mode, you know that you still find something of value there.
But I'm sure that investors are really listening and taking advice from what your analysis. But thank you so much for your time, and of course, wishing you happy new month and happy new quarter.
Thank you very much.
I was Abiodun Adedotu, equity trader with First Securities Brokers. Okay, so any Middle East markets, US markets, as well as Asian markets, all in the red, and no thanks to Donald Trump's big, beautiful bill, as tax bill, as well as the upcoming tariffs, reciprocal tariffs.
So, yeah, July 9th. Well, thank you so much, Anita. Let's find out how Europe is also responding to this with Lars Holter. Hi, Lars. So we see major markets in the red, countdown to the reciprocal tariff is supposed to come on. And so I know Europe has also been having conversations about global trade and the big, beautiful bill that's affecting everyone. And we did see conversations or attempts to reach a consensus by both EU and the US. So I wonder if the color of the market is also red in Europe at this time, Lars. Hi, Lars, can you hear me? I cannot hear you.
We have a technical problem right now. Can you hear me now?
I think we had
a technical problem with the signal.
Yeah, I can hear you now. I hope that has not affected the market, Lars.
Yes, Ini, thank you. I was actually able to hear you. Yeah, the markets, like you pointed out, they are actually down. In London, they're down a bit. In Paris, Frankfurt, the DAX down again. Still with those 24,000 point level, it's still within reach. But just like yesterday, Ini, we're just not seeing much going on again. It's such a very slow start into this trading week. But it's not boring, as we're having another day of ECB watching as the central bankers are enjoying their annual retreat in Portugal. I was talking a bit about it yesterday, and today is another interesting day. And, it's central bankers, but it is indeed central bankers almost from around the world, because the European Central Bank has invited the chief of the Bank of England, the chiefs of the central banks of Japan and South Korea, as well as Fed Chief Jerome Powell out of Washington. One of the topics then obviously is how to keep central banks politically independent, or you could say how to do monetary policy in the age of Trump.
Last, you got me there. I didn't see that coming. How to do monetary policy in the age of Trump. But anyways, this trade war, trade conversation in the Trump age, obviously, because I know the EU is also trying to broker a deal with the US. I wonder how that's going, trade in the future.
Yeah, they are working on that story, but at the same time, I gotta tell you, there are bigger things, I want to say, even in the works. There are really discussions within the European Union in Brussels about how to reorganize trade in the future. And what I can tell you too, Ini, is these talks actually started in Canada just 2-3 weeks ago at the G7 summit. You might remember that one, the one that Trump left early. It seems once he was gone, the rest of the leaders got together to discuss how to work together in future. So this is for now what they came up up with. It seems that the EU wants to move closer to the group of countries that have signed on to the Comprehensive and Progressive Agreement for Trans-Pacific Partnership. That's the CPTPP for short. Now, those countries are over in Oceania. That's Australia, New Zealand. Then we have Canada, Mexico, Chile, and Peru in the mix, Japan, and then some of the Southeast Asian states, Brunei, Malaysia, Singapore, and Vietnam. Now, those countries stand for just under 15% of global GDP, and the EU has almost 18%. And the bloc now wants to work together with those Pacific states to, let me quote here, to prove to the world that free trade with a large number of countries remains possible on a rules-based concept. Now, there have not been any negotiations yet, and there's really not that much out in terms of details. But we are hearing from Chancellor Merz here, he was one of the latest to talk about that the new partnership could end up being so mighty and so powerful that it could sideline and maybe eventually replace the World Trade Organization, the WTO.
Wow, that would be a big deal. And I think this is what we call reinventing global trade.
I would say so. This is really reinventing global trade, but there's a good reason for it. Currently, global trade, is obviously dominated by these two big players, by the US and by China. And what we've been seeing from those two countries has just not been a rules-based approach for a long time. Let's start with the US. We talked about it so much. The US under Trump, they have just single-handedly destroyed all trust anyone ever had in that country by ripping up every trade deal that they had, putting tariffs on all sorts of countries, most of them appearing to be random, of course. Also, the US has been blocking important positions in the World Trade Organization to be filled, leaving that body, pretty much powerless. So now, instead of working through the pretty much defunct WTO on trade conflicts, the US is just punishing other countries at will with tariffs and other measures. And so does China currently, for example, by withholding rare earth materials. All in all, global trade has become very, very messy. And many countries, as pretty much everyone else out there, actually, besides the US and China, they're rather fearful that global trade will no longer be rules-based, but descend into some kind of anarchy, and that would hurt major countries like those within the EU just as much as smaller countries.
Yeah, well, it looks like the world is on its way to a new look of global trade, but let's see how successful that will be, Lars.
Very much seems like that. Good talking to you, Ini.
Same here, Lars. Enjoy your day. All right, now let's come to Africa and talking about trade. Let's talk cocoa. And there's data indicating that the price of cocoa may decline. We know that Nigeria obviously is an exporter of cocoa, even though we're talking about how to add value to that to increase the revenue. But let's see what this may mean to the country as well as other countries. And we're doing that with Rosemary Ahira, an analyst with Financial Derivatives Company. Rosemary, what do we have to tell us the direction of price, that there'll be a decline in the price of cocoa in the coming days?
Good afternoon, Ini. Thank you for having me.
Good to have
so
you.
According to the EIU, prices are expected to fall in the 2025 and 2026 because of an increase in supply. So supply is projected to increase by about 5.7%, and it's due to a number of factors. For instance, milder weather in key producing states. So that's post El Nino weather disruptions that affected cocoa output in key producing states. Then we also have investment in Latin America, that is in Brazil and Ecuador. So they're exploring options outside of West Africa, so investing in those countries and seeing how output grows in those countries. And also, there was an issue of black pod diseases, which really affected cocoa output in West Africa. So that we are seeing that a decline in that, although slowly, we are seeing a decline in that. So these three factors together are helping or will help to bring down the price of cocoa going forward.
Yeah, but I mean, what's the assurance that there'll be no other attack or disease and all of that? Because this was unexpected and it could come up again and change the trajectory of this expectation.
Yes, definitely. And we have no control over weather factors and all. But what we can do, what Nigeria can do, is to implement initiatives to maintain or increase output while also maintaining quality so we can stand as a key competitive player in the global market. So for one, what Nigeria is doing is trying to establish the National Cocoa Management Board. The first draft was actually approved in early May of this year. So what this initiative is all about is to help grow the cocoa subsector to become more competitive in the global market, and also provide soft credit facilities to farmers to invest in their farmlands, and also push forward plantation rehabilitation programs and all, and also to get more youth involved in agriculture and cocoa farming. And this will help to boost export earnings and improve our GDP.
I hope there's also conversation on adding value before it's being exported instead of just raw exports.
With regards to that, Nigeria is still underperforming. So we currently have about 5 factories with a joint capacity of processing about 250,000 tons of cocoa, but they are currently only able to process about or utilize about 20% of that capacity. That's about 20,000 metric tons. This is due to a compound of factors like high energy costs and farmers being more willing to sell to merchants than to sell to these companies because of higher prices that they will get back for their labor.
Right, Rosemary, thank you so much for that and helping us to balance our expectation from cocoa.
Thank you so much for having me.
All right. Other stories from Africa. South Africa may be required to submit a revised trade agreement to the United States, and that's to align with Trump administration's new trade framework set to guide future American engagements with sub-Saharan African nations. The template outlines new trade terms and is part of Washington's push for more reciprocal trade relations in the region. SA has, however, not yet seen the template as it's yet to go through approval process with the U.S. administration. And this is according to the Department of Trade, Industry and Competition. Still in South Africa, the AFDB, that's the African Development Bank Group, has approved $474.6 million loan. That's to support infrastructure governance and green growth. The board of directors of the African Development Bank Group approved this for South Africa's governance and green growth, and this financing marks a significant milestone in the country's transition toward a sustainable, low-carbon economy. The landmark financing backs infrastructure overhaul, renewable energy expansion, and climate resilience while safeguarding vulnerable communities. And talking about renewable energy, we go to Zambia, where that country has launched a 100 megawatts solar plant supplying first quantum minerals. And Zambia's president opened the country's biggest grid-connected solar power plant built by Power China, which will supply electricity to copper miner First Quantum Minerals. The 100 megawatt Chisamba project is expected to reduce the southern African country's reliance on electricity imports from neighbors South Africa and Mozambique, and is supposed to free up capacity for Zimbabwean consumers that would have otherwise been used by First Quantum Minerals. In Ghana, 24-hour economy is the focus as the government invests $4 billion in full-scale implementation of the program. The government has projected to mobilize $4 billion in the next 4 years towards the full-scale implementation of the 24-hour economy program from development financial partners and institutions across the globe. The program is designed to transform the economy and stimulate private sector participation to create jobs and ensure prosperity for all Ghanaians. And then in Kenya, the President, William Ruto, has called for urgent reforms to the global financial system, urging world leaders to reframe public debt as a tool for development rather than a burden. the head of state, speaking during the 4th International Conference on Financing for Development in Spain, emphasized the need for inclusive, fair, and affordable financing models that prioritize the needs of developing countries. Kenya, alongside Colombia, France, and Germany, co-led an independent expert review on debt, nature, and climate, a move that Ruto describes as a model for meaningful partnership for inclusive and sustainable growth. Let's head to the crypto space and see if the crypto has been able to escape the red color, but doesn't look like that. So we see it's a red color for this afternoon. For Bitcoin, lost more than 1%. Dominance down 63.34%. Ethereum is also red, as well as some major altcoins at this time, unfortunately. And I guess it's all tied up to what's affecting the traditional markets. Every market, the world is global at this time, so everything is connected. So, all right, so a red market for Bitcoin and a lot. But let's see the headlines, what's happening in the crypto space at this time. Starting from the United States, U.S. politicians claim that they plan to get digital asset legislation into the desk of President Donald Trump, whose crypto ventures seem to have found a new gear for growth. So, you know, there was the Trump and then his wife, they have their coins. And this is all in the midst of the big, beautiful bill. So Congress focuses intently on Trump's big, beautiful, and highly controversial spending bill. The strategy for passing stablecoin and market structure legislation is growing clearer. They said that the timelines might not match Trump's demands for accelerated action. So a lot going on there. Is President Trump one way or the other pushing for his coins and all that? Well, we will see. And closely related to that is Elon Musk. XAI's $10 billion funding boost threatens AI innovation and market position. You know that XAI is Elon Musk's artificial intelligence startup, and it has successfully secured $10 billion. Even though it's being said that he's not so popular. In the morning, we talked about how Tesla seemed to be losing face sales, you know, in some countries. But his AI getting 10 billion, that's a lot. Maybe that's where people will be looking at. Also, for the headlines this time, over $1.7 million in XRP exits Binance amid bullish higher low signals. Leaving Binance, hot wallets suggest that investors are taking tokens off exchanges for long-term holding, reducing sell pressure and setting the stage for potential bullish move due to reduced supply and increased confidence. So these are the headlines at this time, and that's where we say thank you so much for being a part of Business Incorporated for today. It's the first day of the month. Thank God we're in July, getting close to the end of the year. But we still have more episodes of Business Morning and Business Incorporated to you, because our target is to keep you abreast of what's happening in the world of business. I'm Ini John Mekwa. I'll see you tomorrow. God's grace.